The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
As the rubble clears from Terra's collapse, other parts of the crypto industry remain shaken. $10 billion was removed from Tether's market cap, the largest stablecoin in the world. Celsius, a big backer of Terra Luna, has folks questioning the crypto lender's books. Joining us now to discuss is Alexandre Laura, as analyst at crypto advisory Quantum Economics. Hello there, Alexandre. Thanks for joining us. So, markets are a bit up, but obviously there's still some ramifications, reverberations in the crypto industry from Terra Luna's collapse. And what do you make of these big redemptions from Tether, whereas other stablecoins such as USDC are seeing actually an increase in their market cap?
I think USDT's history is coming back to haunt it. My main concern over USDT is providing external audits of their assets. There was some concern about them holding non-US bonds on their balance sheet. I'm not so concerned about that because that was less than 0.5% or less than 1% of their holdings. I think that they could do a better job of transparency. I think they've done a better job of transparency than, say, several years ago, but I think it remains a concern. Personally, as an investor, and usually I don't trade, but personally I only hold USDC stable coins.
So, Alexandre, obviously USDC has its own, it's relatively minor issues compared to Tether. It has its own issues, to be sure. But nonetheless, Tether is a stable coin on its balance sheet with assets that are basically volatile. So you have cryptocurrencies that are listed on its balance sheet. They don't disclose just how many. They have commercial paper on its balance sheet. Again, a volatile asset. They don't disclose the exact, where they are located, who graded them, things like that, what country they're from, etc. Are those grades accurate or not? So is this a general move by the market saying, look, we got burned by UST because it had a volatile asset backing it. We don't want to get burned by USDT because it might have volatile assets backing it. If we want to redeem it, we might be redeeming into an illiquid market. Is this sort of a changing of the mindset that has been in place for half a decade, if not more, in crypto, that everything was fine with Tether because nobody would ever want to redeem it? Has there been a fundamental change in the mindset of the crypto trader?
I'm going to go in the middle there and say there has been a change, but I think it's a more short-term change. Human beings have been trading volatile assets for hundreds of years. Personally, I prefer USDC, and I don't think it's a perfect system either. I think more transparency is needed in terms of showing what they actually hold on their balance sheet, and I think it should be in real time, just like you can do on a blockchain, for example. Right? You could see what's going on in Bitcoin, you could see what's going on in Ethereum. You can't see what's going on in USDT's treasury, and I think it's going to remain to be an issue as markets are down and investors are more focused on hunkering down and preserving their assets. I think that's going to be an issue. In the future, when markets turn around, it remains to be seen if that will continue, or as investors are seeking greater profits, they ignore that, and the next bull run ignore that for several years. Tether is still the most traded stable coin. Again, I prefer on the more conservative side. I would generally only touch USDC, but I think that it's a short-term change as long as the bear markets continue, which I personally think is going to happen for the next at least year.
Now, I might have lost some bit of audio earlier, but to the question as to whether what's the size of the digital assets that they claim on their balance sheet. They don't actually break it down. They say it includes digital assets. There's always been speculation that they're involved in some way, or that they're using Bitcoin, for instance, as a potential asset here, which kind of makes a circular situation, right? You use Bitcoin to shore up Tether, which is used to buy Bitcoin to shore up Tether. Does that kind of also raise a red flag to people, even if they consider Bitcoin to be the gold standard, and again, going back to the mentality of the crypto trader that Bitcoin is ultimately the only real money around? But does it create a conflict for Tether because its assets on one side are volatile, and particularly with digital assets, and on the other side they have real, fixed liabilities in terms of dollar-denominated liabilities. Does this make a big problem in Tether?
Absolutely.
That they can't get out of. Okay.
Absolutely, it does. The fundamental question is, why would you back a stable asset with a volatile asset? And I'm a Bitcoin bull, but it just makes no sense at all. So I think as long as they have not provided transparent audits of their treasury in real time, it's going to remain a problem.
Alexander, I want to shift over to Celsius. They pulled $500 million from Anchor Protocol just before the crash of Terra Luna, but people are still questioning whether it has all of its user assets. I wonder what your thoughts are on that discussion.
I think it's a good question. Personally, I have some exposure to Celsius, not that much. Their token price has dropped 90%. But, I think it remains to be seen. I don't think there's need for excess fear. I think we might be throwing out the baby with the bathwater. There's a rival exchange that is actively spreading a campaign saying that Celsius is insolvent, and Alex Mashinsky has denied it. So I think he could do a better job of showing transparent records, but I don't think that Celsius is the same as Terra Luna. 3 or 4% interest on Bitcoin is different than 20% interest on UST.
Right. Last week, some of the Celsius users tried to pull out their Cell token holdings because, as you mentioned, that there was a huge price decline. They found, however, and they claim that it was illiquid, the trading, which heightened their losses. The CEO, Alex Mashinsky, has suggested that Wall Street sharks are trying to take down Celsius. I wonder, is that the case? Or, it's just normal market mechanics of people just trying to take over or test vulnerable projects?
I think anyone's guess isn't necessarily true until it's verified. I will say that there does seem to be a concerted campaign against, really centralized finance crypto products that offer better products than banks. I think the biggest hit to Celsius was actually the SEC essentially pressuring Celsius, Nexo, and BlockFi to close down their interest products to Americans who are not multimillionaires. And I think that's the biggest risk, really, to the Celsius ecosystem. Their customers are not going to go to Celsius if they can't. So I think that's more the bigger issue, and resolving that, I think, is crucial to Celsius's future and the future of, really, crypto products competing with big banks in the U.S.
Alex, we obviously saw this huge run up in Luna and interest in UST up until the crash, based on, as we were discussing, Anchor, the 20% the returns that they were promising. It became such an important part of the DeFi world. Do you think that DeFi in general is going to suffer between long term because of the implosion of UST? But also because of these issues involving the likes of lenders like Celsius? Do you think that this kind of, I don't want to say a death blow, but do you think that it will set back DeFi for years to come?
I think it will definitely set back DeFi throughout this bear market, perhaps extend it. I still think the free market essentially voted out an unsustainable product. I think that's overall healthy for the future of DeFi, because it needs to actually be a battle-tested, real system, and not just something built on someone's hope. So bullish long-term on DeFi, but I do think that it's going to take perhaps more growing pains for DeFi to fully mature.
Mm-hmm. Well,
speaking of mature, I do love that unicorn
stronger.
shirt.
It's a 1-inch shirt. I got it at a crypto conference whose name I won't mention.